Hi everyone, another quarter has passed, and this is a review of what happened in Q3 in the property market. Let's first talk about some of the latest developments affecting the market. The first is that the US Federal Reserve has cut interest rates again in October, but signaled that it is not confident that they will cut rates again in December. This is because that inflation is still a threat on the horizon. Now, what is the impact on Singapore's home loans? The first is that private home loan interest rate packages back in Singapore have already fallen below to 2%. So our interest rates have already fallen ahead of the US. But what hasn't decreased by as much is the bank's internal stress test. So this is the interest rates that banks use to calculate the amount of home loan that you're eligible for, not the market interest rate. So because of the uncertainty in the direction of US interest rates, banks' internal stress test is currently still at 4%. So I would imagine that if the Fed continues to cut interest rates, the bigger impact would be for the internal stress test rate to fall rather than for interest rate packages to fall further. Now just imagine what that will do to demand once the internal stress test falls. So moving on, 2025 is already the best year for new launch sales since 2021. And I'm expecting transaction volumes to continue to remain strong in 2026. Now this is because the government has continued to release a high amount of new land under the government land sales program, slightly less than the full year of 2024. Typically from the date of announcement, it will take about 1.5 years for the projects to be ready and sold on the market. However, buyers shouldn't expect that property prices should fall. One reason is because the land bids have already gone up despite an increase in supply, shown by the diagram on the right. Now when land bids increase, there is more pressure for the developer to maintain or to increase prices so that they can get a decent margin. Next, when we look at Singapore's economy, we have thus far been able to weather the tariff storm and have exceeded expectations. In the third quarter alone, the economy grew 2.9%, beating the forecast of 2% in a Bloomberg poll. However, the government has come out to warn of a slower 2026 despite these achievements. But looking into the longer term, Singapore's economy is expected to remain resilient and to continue growing, with DBS predicting that it could reach $1.5 trillion worth by 2040, which would also raise the Straits Times Index to 10,000 points. Now I've done a bit of the math. I think it's quite possible for GDP to actually hit 1.5 trillion by 2040, but for the Straits Times Index to hit 1,000, there needs to be a bit of a push when we compare to historical growth. This push would likely come from the government support to boost liquidity in the Straits Times Index. Now moving on to market-specific data, when we look across the different asset classes, HDB, condo as well as landed, prices have continued to increase. On the right, you will also see that the full year transaction volumes for condos have already exceeded last year, while landed properties is also on track to at least meet 2024's total sales. However, one market falls short, the HDB resale market. Transaction volumes look like it could be lower than in 2024, despite prices rising. So we could finally start to see a turn in the HDB resale market. Now whether this is good or bad depends on whether you're a buyer or a seller of HDB market. So if you would like to plan your next property move, DM me to discuss. The average island-wide HDB price, which could approximate to a 4-room HDB, is about $646,000. So median prices of transacted HDB in the center is still much higher than the outskirts. The other thing to take note is that when you look at some of the neighbourhoods, you will see that the median prices transacted is much lower than what you see in some of the transacted prices in the news. Now, one reason why this could be the case is because the units that you see on the news could be newer properties. However, when you look at the majority of neighbourhood, the majority of HDBs are actually old compared to this small minority of new properties. So buyers looking to purchase new HDB flats in a more mature HDB estate need to be a bit careful because you could be paying a big difference just for a newer resale HDB flat. Next, let's move on to the condo market. The average island-wide price of 1,000 square feet in today's market is about $2.44 million. Similarly, the outskirts do offer cheaper condos relative to the prime properties. Now, one thing that the data doesn't reflect is that in some of the neighbourhoods, such as the CCR properties, some unit types tend to be bigger than compared to other neighbourhoods. However, the purpose of this slide is just to give you an indication of the amount that you will need to set aside if you were looking at a 1,000 square feet property. So one takeaway for me is that a price of 2.44 million is actually quite comfortable for condo buyers in the market. Let's move on to the landed property segment. First, on the inter-terrace, entry prices for most freehold properties have gone up, with an island-wide average per square foot already exceeding $2,000 per square feet. So if you're looking to move to a freehold inter-terrace, do make sure that you set aside this amount. Of course, one thing in the landed market is that prices tend to have a wide disparity depending on the condition of the unit. New rebuilt units will definitely be asking for a higher price. So this is just to give you some gauge of what kind of entry prices to expect. For freehold semi-Ds, entry prices are already hovering above 5 million. Island-wide average per square foot has already exceeded $1,850 per square foot. Now, when we look at the semi-D as well as the detached segment, the land sizes can also vary by quite a lot. So generally, the larger the land size, the lower the per square foot. However, your total budget needed would increase. For detached homes, your average per square foot island-wide has already exceeded $1,820 per square foot. So one thing for this sub-segment is that your detached homes don't tend to have a lot of transactions quarter on quarter for there to be a good approximation of the market. So you tend to see more fluctuations in the detached market. Similar to my past quarters updates, here are a list of districts and the respective names of the neighbourhoods associated with the district. Now you can pause the video right here if you'd like to find out where a certain neighbourhood is located. Let's talk a bit about the rental market. Island-wide rentals seem to have bottomed. Condo rentals have instead recorded an increase in Q3 of 2025. And I expect that there will be more upside ahead for landlords. Full-year transaction volumes are also looking likely to match 2024's. Zooming into the different regions for the condo sub-market, OCR and RCR rentals have indeed bottomed out, while there is still some fluctuation in the CCR rentals. No change to the transaction volume. We are on track to match at least 2024's data. So moving on, let's talk a bit about the new supply, both in the HDB and the condo market. New supply remains high, whether it's in terms of the number of BTOs launched or the number of units launched in the government land sales program. In 2025, the number of BTOs launched is 19,600, which is quite similar to in 2024. In 2026 and 2027, the government has already come out in advance to say that there will be 35,000 BTOs launched. In the private market, the government has launched 4,725 private residential units in the second half of 2025, taking the full year total to be slightly under 2024, but relative to a longer time frame, it is still a large number of units. So taken together, I expect the rate of price increase in the primary market to slow down. But skeptics hoping that there will be a price fall will be disappointed. Now this is because the land bids for projects that are going to launch in 2026 have already shown an increase, suggesting that there's more pressure on developers to increase prices so that they can sustain their margins. It is not only the land bids that have increased, but a number of bids have also gone up. So this is an indication that developers feel bullish about the market, which is very different than compared to just last year in 2024. Moving on to the resale market for both HDBs and condos, there is the lowest number of MOP units for HDBs this year, but expect the supply of MOP flats to increase. Now, why is that important? With the increase in HDB supply both in the primary and the secondary market, I don't expect the rate of price increases to be as strong as the previous years. Similarly, in the condo market, this year is the lowest, but we expect the next 3 years to actually increase. But one complexity in the condo market is that the government has actually increased the seller stamp duty period from 3 years to 4 years earlier this year. So projects that were TOP in late 2028 or 2029 will not come into the market. Instead, they can only come in 1 year later so that the owners do not pay the seller stamp duty. This will help to smoothen out the supply rather than what you see in the HDB market, which is a steep increase. So on interest rates, earlier in the video, I've already talked about the latest move by the US Fed. And back here in Singapore, you can see that interest rate packages have already come down since the start of this year or even late of last year. So we have moved ahead of the US Fed interest rate cycles. As of the time of this recording, interest rate packages are hovering at about 1.7% across all the major banks, with some banks even offering lower than that. Now let's look at the structural factors which will help to support longer-term price increases in Singapore. Both income and population growth continue to be strong. Based on last year's data, the top 20% of households earn about $18,000 a month, excluding employers' CPF contributions, while the top 10% earn about $22,000 a month. Now, what's important then is to reverse engineer the maximum purchase price that they can afford. So for someone taking a 30 years loan tenure who belongs in the top 20% of income earners, the maximum purchase price is about $2.76 million, while the top 10% of earners can afford a $3.4 million property. So if you're considering a property price of under $2.76 million, I think that it is still relatively safe. What will help your unit stand out and to sell faster would then depend on the project information as well as the neighborhood, facilities, and transportation networks. So if you'd like to discuss more on your next property move, DM me. Total population has also continued to grow, and in 2025, we have already exceeded 4.2 million total residents, which will support housing demand in the future. Now, another important factor to consider is unemployment rates. And since Q3 of 2021, unemployment rates have hovered between the 3 to 4% mark. So for the past 4 years, there hasn't been any evidence of increasing unemployment rates. This would mean that most people would be able to afford their mortgages, which will bring some stability to property prices in Singapore. So when we take into account all of these factors, both cyclical as well as structural, property prices are expected to continue going up, with potentially a slower price increase compared to previous years because of the increasing supply both in the primary market and the secondary market. Now, how this information will benefit or hurt you will depend on where you are in your property portfolio. So if you'd like to discuss, drop me a message. See you in the next one and take care.